Fresh highs on Dalal Street, powered by financials. The Nifty crosses the 24,300 mark. The Sensex notches up 80,000 and the Nifty Bank surges nearly 2%. But heavyweights like TCS and Reliance limit Nifty's gains.
HDFC Bank's foreign shareholding falls to under 55%, creating room for an increase in MSCI weightage, potentially opening the stock up to passive inflows of around $2.8 to $3 billion. The stock rises over 2%.
Federal Bank gains on strong growth in deposits and advances. Moil as well jumps on posting its highest ever quarterly sales, while V-Mart reports a 16% rise in its total revenues.
Hello and welcome to a fresh new edition of Markets Forward, your go-to show where we aim to get you all the key data points that you need to gear up for the next trading day. I'm Surabhi Upadhyay, and with me as always is Nigel D'Souza. Nigel, we may as well wear green jackets and green shirts, right? Because this is a market that's in very strong grip of the bulls.
Well, that's right. I was on leave last week. I was thinking of dyeing my hair green as well, because that's the mood of the markets. But I'll tell you what, we've got you covered for the next 20 minutes. We're quickly going to run you through all the big news pieces, get you the key developments, and also all the top corporate voices that we spoke to all through the session. But let's first up take stock of what went on in today's trading session. The Nifty and the HDFC Bank stock, both of them opened gap up. And barring the first hour's highs, actually we couldn't get back to those levels. The Nifty actually ended closer to around the high point of the day, but HDFC Bank, all the positive news with regard to the MSCI rejig and the flows that could come about in the next 1 month or so, well, all of that seems to have been factored in the price, at least for today, just in the near term, because there was long build up on the stock. There was a fair bit of delivery-based buying on, and that's where the stock, if you pull up the intraday chart, after opening closer to around that 1800 odd mark, it ended at around the 1770 odd mark. So a bit of an anticlimax playing out on HDFC Bank. The Nifty Bank, well, that rocked though. That did very, very well in today's trading session, and that went home with gains of close to around 1,000 points, because the other big names in there, they put their hand up and they got counted. ICICI Bank did well, SBI as well did pretty well. The problem was the Nifty Bank did well, but you had stocks like Reliance Industries as well as TCS. Both of them did come in for some selling. Now, one school of thought would be that the weightage of HDFC Bank is going to go up on the MSCI Emerging Market Index. So there will be some weight reduction on various stocks. May not be restricted just to Indian stocks, but some of them could see some bit of skimming off in terms of weightage. So that could be probably one of the reasons why larger cap names, which have a high weightage on the same index, Reliance and TCS did underperform today. But the breadth of the market was good. The broader markets did outperform. The small cap index, in fact, went home with gains of close to around 1%. And all through the trading session, you had way more number of stocks that were advancing than the number of stocks that were declining. So all in all, your portfolio is feeling good. HDFC Bank did well, maybe not as well as you would like it to have done. And the Nifty went home with gains of close to around 140 points. What's your Surabhi?
Absolutely. It was a very good day, because the thing is, even beyond banks, it wasn't just a bank-driven narrow move. Yeah. There were lots of other pockets within the Nifty that were fired up. A lot of consumer stocks were doing good. Some of the auto stocks had a good run up going for them. Some of the metal names like JSW Steel, so they were up and about. In fact, by the end of it, the only problem area for the market was Reliance. Even TCS, the stock really limited its losses. And if you see on the other side, of course, the banks are showing up because they have very high weightage. But if you look at other names, lots of names up there. Some of the Adani Group stocks doing well. Tata Steel having a good session. Lever, like I said. So very diverse mix of stocks moving higher, but absolutely no taking away from the fact that it was banks leading from the front. So we're going to talk more about this and more of the trends. Let's tell you what is lined up on the show today. Well, as always, we'll get you more color, and that color was green in terms of the key movers and shakers. Hormaz will fill us in on all the action. Then we put the spotlight on HDFC Bank, ICICI Lombard, V-Mart and Federal Bank, and we'll tell you why in just a bit. And finally, of course, all the key events to watch out tomorrow. But first, let's go across to Hormaz to look at the shades of green we saw on the screen today. Hormaz.
But the ideas you guys shared are not too bad, and the markets are taking the go green mantra a little too seriously right now. And as you just mentioned, the financials were the stars of today's session, and it was the banking stocks that led the index higher. Bandhan Bank ending at the highest point of the day, 4% higher. HDFC Bank ending at the lowest point of the day, but still the top contributor on the Nifty upside, or 2.5% higher there. Kotak Bank, Axis, IDFC First. IDFC First also ending at the highest point of the day, by the way, 2.5% higher for that stock as well. It was a return of the PSUs today. We haven't spoken about them in a while now. And REC and PFC, after the very bullish note from Bernstein, ending with gains of up to 6% in today's session. SAIL had a very good day today. NMDC and BHEL. BHEL ending at the highest point of the day as well, 5% higher there after that Reuters report on the power equipment ordering there as well. Some companies came out with business updates, and they are the ones that saw a bit of a reaction as well. Federal Bank, as you just highlighted, MOIL was nearing its record high today. It could not hit those levels, but still ended 7% higher. Hindustan Zinc did well. M&M Financial, recovery from the lows of the day, and that is why that stock ended in the green after opening gap down in today's session. A lot of stocks gained on the back of volumes. Castrol hit an 8-year high today, 13% higher for Castrol. MMTC, Gujarat Pipavav did well. HUDCO as well saw a block deal towards the close of trade around 0.4%, and Cello World having a good day as well on the back of strong volumes. And lastly, Wockhardt is the stock that I wanted to mention. 11 days of gains now. The stock was in the red earlier today, recovered all of those losses, ending 5.5% higher, closer to 900, and the longest winning streak on record for Wockhardt. Back to you guys.
Okay, all right. Thanks very much, Arma. So lots of action, and most of it on the upside of the screen today. Joining us on the show are Mayuresh Joshi of William O'Neill, as well as Shrikant Chauhan of Kotak Securities. Gentlemen, great to have you on. Thanks very much for being with us. Shrikant, let me open with you. I mean, these indices are just moving in blue skies, right? We're moving to new milestones every day. And today's intraday high actually took the Nifty to 24,300 now. So just from a momentum perspective, trend perspective, what's the advice in terms of the index, starting fresh trades? How should one look at this market?
Yeah. Good evening, everyone. I think, this market is into a strong momentum, and it is just moving upward with a very shallow correction. On intraday basis, even though there was despite of several rounds of profit-taking pressure yesterday, we saw a good amount of buying support at 24,000 levels. And today, under the leadership of HDFC Bank, we saw the market was crossing the level of 24,300. So while looking at the setup of the market, I think it is going to follow the similar sort of trend. I mean to say shallow correction will come on intraday basis, but eventually the market will keep on moving upward because the momentum is very, very high. Large cap companies like Reliance Industries, HDFC Bank, and maybe a few other index heavyweights, they are going to participate on frequent basis. That's the overall view. So based on extensions, we can say that the next level to watch out for would be 24,500 for Nifty. And on the downside, 24,200 going to act as major support. But eventually, I think the markets are heading for the levels of 25,000 based on its overall technical pattern. And for Bank Nifty, today, it has crossed almost all the important levels and managed to close above the previous highest levels of 53,000. So based on its technical formation, the next level to watch out for would be 55,000 for the Bank Nifty. So ideal strategy should be to buy if there is any intraday correction or correction of 1 or 2 days max.
All right. Got that, Shrikant, and you're sounding fairly optimistic. And if the Nifty and the Nifty Bank need to do well, then the key player will have to be HDFC Bank, which incidentally is the stock of the day. It was up 2% after the latest shareholding pattern showed that the foreign institutional investors currently hold less than 55% stake. This makes them, eligible for a potential increase in the MSCI weightage. Abhishek joins us to fill us in with a quick analysis on that. Abhishek, over to you.
Well, HDFC Bank has released their June shareholding, which shows that the FI holding is below the 55% level. So June shareholding does indicate that there are chances for weight increase in the MSCI digit, which will happen in August 2024. FI shareholding as of June is at 54.83%. FI holding had to fall below 55.5% for the eligibility with respect to MSCI inflow into the bank. So HDFC Bank is expected expected to see an inflow of close to $3 to $4 billion, wherein the FI headroom has slipped below 55%. This creates a headroom of 25%. Just to alert our viewers, foreign investment ceiling in HDFC Bank is at 74%. Back to you.
Okay, all right. Thanks a lot for that, Abhishek. Well, Mayuresh, what's your view? You know, the stock has been a big outperformer, and we were making this point even on a lighter note that in February, around Valentine's Day, it went down to around that sub 1400 odd levels. From there, it's given you 25% return. Though in the last 1 year, it's actually not moved a rupee. Because if you pull up a 1 year chart, same day last year, it was at around 1,757 rupees. And today it ended around there. So yes, it made another 52-week high, but it's absolutely at the same level. What's your view on the stock?
No, I think we remain positive, Nigel, on this one. Again, I think the synergies that will build up over the next few quarters, both on the revenue and the cost side, will be significant enough. But it's very early to draw a parallel that the same will start happening for this quarter. And therefore, if investors of the belief that a turnaround should start happening immediately, that's probably not going to happen. But they are going to probably ensure that the cross-selling happens, specifically for the HDFC book. There will be some element in terms of recoupment of NIMs as rate cuts happen. And as they successfully cross-sell, there will be significant deposit mobilization at lower rates, which they will obviously benefit in terms of their incremental spreads going forward. And therefore, I think these benefits, as they start seeping in over the next few quarters, should incrementally add to the book value of the overall consolidated numbers. Therefore, our take is second half earnings recovery should start taking place. It should be sustainable over the next few quarters. Obviously, a lot of issues that they faced in the past, technological glitches, the glitches in terms of the entire merger and consolidation taking place should largely be over. And therefore, I think numbers should be better as we head into the next few years. So yeah, I think we remain optimistic on HDFC.
Okay, so remain optimistic on HDFC Bank. Actually, we also caught up with Sriram Velayudhan of IL Securities to just understand the technical impact of this. If indeed the MSCI decides to go ahead and increase the weight in their global indices for HDFC Bank, then what happens? So Sriram feels that this could lead to an inflow of almost $2.8 to $3 billion. That's just passive funds coming into HDFC Bank. He also anticipates a 4 to 6% up move in the stock. We've already had 2% today. Let's take a look at this view.
So HDFC Bank weight up event has been one of the closely followed events in the Indian markets. So we were expecting this to happen. The foreign room has opened about 25%, and as a result of this, the adjustment factor will be revised from half to 1. This should lead to passive inflows of roughly $2.8 to $3 billion. We anticipate a further up move of 4 to 6% in the name in the run-up to the deval event. In terms of impact, it would be the likes of Reliance, TCS, Infosys, and all, which have a higher weight in the index. But in terms of ADV, it should not have that much of an impact because all these are very, very liquid names.
All right, well spelled out there by Sriram, and they were on top of this one as well. Well, let's focus on a couple of other names. PFC and REC, both of them surge in trade on the back of a positive note coming in from Bernstein. Sudarshan is standing by to run us through the details of the note. Well, Sudarshan, tell us about the details, but I love the header. You know, you love them, hate them, but you can't ignore them. What else are they saying?
That's so true. So in today's session, we saw a healthy gain in both the power financial names. PFC closed with a gain of more than 5% and REC ended the day 4% higher. And this gain came after brokerage firm Bernstein has initiated coverage on these stocks with a buy call, and target for REC is rupees 653 per share, and for PFC it is rupees 620 per share, indicating an upside of 17% for both these companies from current levels. And the rationale Bernstein has given is in current power cycle, both these PSUs are amongst most preferred plays, with NPA risk being much lower. It says investors are underestimating duration and intensity of this current power cycle. Also, it says both these companies have better ROEs and growth than peers. ROE for both these companies is more than 20% and growth is higher than 15%. On valuation front, Bernstein says it's cheaper than peers despite a run of more than 200% in last 1 year. PFC is trading at 6.7 times FY25 forward PE, and REC is currently trading at 8.5 times.
Okay, got that. Sudarshan, thank you very much for the summary of that note. And indeed, it got the market excited. Those stocks were up and about today. Srikanth, let me ask you, in power, the underlying fundamentals and the story obviously is well known. And I think most people agree that, that there's good reason to look at the sector. But just purely in terms of, playing the stocks, on the charts, what looks the best? And do PFC and REC make the cut for you?
Yeah, these power finance companies, they are like really doing well. Whenever they are falling or correcting from their highs, we see good amount of buying interest in the stock. At the same time, whenever we go through with its delivery-based volumes, then there also we see good amount of buying attraction. So while looking at their technical pattern, I am of the view that PFC is something which is going to perform much better in coming few weeks or months, because the stock is consistently forming higher top, higher bottom. Even when there was like sell-off in the market on the day of election results, the first stock which recovered sharply from lowest level was PFC. So based on its formation, I think it is gradually moving up, but eventually it is heading for the levels of at least 600 or 630. But we also like CESC, Calcutta Electricity, which is around some 158, 155 levels. There also we saw good amount of consolidation for last several months. And after that, the stock has broken the resistance level, which was around 155, 160. Based on its technical formation, there also I am expecting stock to move towards the levels of 200 in next few weeks or months. So it will take time. It's a positional view, but we like CSC as well as PFC based on their technical formations.
Okay, so PFC and CESC, got it. So two stocks on the power side that you like. Let's now look at some stocks that were rallying on the back of positive quarterly updates that came in from the company, and there are lots of them cutting across sectors. So there was V-Mart from the consumer side. There was Moil, that stock did really well, and Nigel's going to tell us more about it from the metal space. And then there was Federal Bank. Those numbers were also looking quite good. Federal was up 4-5% throughout the day. So we've got all the three experts, in-house experts with us. Manglam, why don't you start? V-Mart, how were the numbers?
Well, V-Mart, the numbers were good. In fact, the numbers tell you that business is actually picking up. So the total revenue growth for the company this time around was 16%. The number was 786 crores. But importantly, the core of the business, which is V-Mart Retail, showed a revenue growth of 17%, closing in towards that 775 crore mark. Importantly, the same-store sales growth, that was 12% higher as against same time last year for V-Mart, almost 8% for Unlimited, which is the chain of stores that they acquired from Arvind a bunch of years ago. They've opened 7 new stores. 5 of them were V-Mart and 2 of them were Unlimited. And they've closed 3 Unlimited stores as well. And that's a positive for them because Unlimited stores were the ones which were actually not doing very well for the company when it came to margins. What did the company say to us when they spoke today post their update? They're targeting high single-digit SSSG for the entire year. In the quarter gone by, they've seen higher bill cuts and consumer footfalls despite the heat and no festive season, along with no weddings as well. So that only increases the optimism for the year. On the margin front, they said that they've looked at value fashion and they're looking at price cuts. So they're targeting absolute EBITDA growth, not necessarily margins, but Unlimited business will see better margins going forward. And in fact, the margins of Unlimited will converge with that of V-Mart itself looking at next year. So maybe then we will look at double-digit margins for the company.
Okay, all right, V-Mart, for the time being, I guess that optimism really rubbed off well on the stock, up about 5%. Manglam, thanks for that. Let's come to Abhishek. Abhishek, Federal seems to be showing some scorching numbers in the first quarter, right?
Well, they have gained market share both in deposits and advances, both YOY as well as sequentially. So quarter on quarter, if you take a look, the loan growth is perhaps one of the best that you are seeing in last 7 quarters. CASA, the absolute value has grown healthy, but overall deposit growth is much faster. So the CASA ratio is at a 9-year low. So talking about deposits are up 19.6% YOY and about 5.4% sequentially. Now industry is facing a deposit growth scare because deposit growth came in at 12% for 14th of June for the industry as a whole. So this is a good number. CASA in absolute value grew by 10% YOY and 5% sequentially. CASA ratio has dipped a bit to 29.3% versus 29.4% in the previous quarter, and this as a ratio is at 9-year low. Customer deposit growth was healthy, close to 20% YOY and about 5% sequentially. Loan growth remained healthy for them at 20.1% YOY and about 5.4% sequentially. So the credit deposit ratio has improved both YOY and quarter-on-quarter, suggesting that the net interest margin may more or less remain stable to the previous quarter's numbers. Back to you.
Okay, all right. Indeed, very strong numbers coming there on almost all fronts from Federal Bank. Thanks very much, Abhishek, for that. And now, Nigel, Moil. So, good sales?
Well, that's right. The operational update looked quite good. And it was a day when the dollar index was softer. And the dollar index is softer. You normally see metal stocks did well. And that's precisely what happened. So that was the additional tailwind. Let's break it up into three pieces. First piece is the numbers that they gave. If you look at the sales number was up 14.5%. The production number was up close to around 7.8%. And in terms of exploration, they said that on a year-on-year basis, that's up by close to around 49%. So the street like that. Point number two, it has a good balance sheet. Close to around 10% of its market cap is available in cash, because the cash balance of last reported was around 1,100 crores on. So that's good news. And point number three is that's the EPS they've delivered. That's what Antique believes that they will deliver. And the following year, that's what Antique believes what they'll deliver. 39 rupees from around 15 rupees that they delivered in FY24. If that's the case, at around 39 rupees, it trades at around 12 times its core earnings, stripped of the cash in its books. So put all these three factors together: good operational performance, clean balance sheet, and optimism on what they're going to deliver in the next 2 years explains why the stock was up 6.5%. And just to add a point, if you pull up a 2-month chart of the stock, you'll see it went to around 570, then it corrected to around 500 rupees on. So today it was bouncing back and recovering some of those losses.
Okay, a fantastic show from Moil as well there. Got it. Thank you for that. Let's quickly go across to our guests. Let's ask both of them for a quick pick. We've heard all the updates. Mayuresh, on fundamentals, out of all these stocks, which one do you like?
Federal Bank. I think banking is something that will continue doing well in our opinion. And very decent updates from Federal Bank, 7-quarter high as far as the loan book is concerned. You're expecting a reasonable amount of cost income dynamics to play out positively for the bank itself, and the NIMs to revert back to mean and the second half itself. So Federal Bank is where the update is what I like.
Okay, all right, gentlemen, we're out of time. So unfortunately, you'll have to leave it over there. But thank you very much for all the perspective that you've shared with us on the show today. Let's take a very quick break. We'll come back on the other side, get you all the top corporate commentary from today's trading action, and then, of course, the events to watch tomorrow.
Welcome back. You're tuned into Markets Forward. Well, let's get to some of the corporate voices that we had earlier in the day. Narayana Health announced its launch of its first health insurance product, Aditi, at an annual premium of around 10,000 rupees per year. The management said that they do not plan to be a national level insurance provider, and they're not looking at chasing scale. They added that the insurance venture will break even sooner than the 7 to 8 years that the street was speculating about.
We also caught up with the management of NLC India. They have guided for 16 million tons of coal production, 24 million tons of lignite production and power generation at 35 billion units for the current financial year. For the renewable portfolio, they plan to increase capacity by 4 times to 6 gigawatts in 2030 or by 2030, and could look at an IPO of this vertical by the 4th quarter of the current year. All right, so that's all the corporate action. And now the events to watch tomorrow. Manglam is here with a roundup.
Well, it's a Thursday tomorrow, so we are of course looking at the Nifty weekly options expiry, and this is the first one for the July series. That's something we'll keep an eye out on. Vodafone Idea, that'll be another stock on our radar, because all the price hikes that the telecom companies announced, remember for Vodafone, the price hikes come into effect from tomorrow itself. Godavari Power as well. They had announced a 301 crore buyback at a 1,400 rupees price. It's a tender buyback, so opens tomorrow, closes on July 10th. Then to the primary market action, we have another IPO that is opening tomorrow, Ambi Labs. The IPO opens tomorrow, so that's something we need to keep an eye out on as well. And while trading today on Wall Street is curtailed, tomorrow there is a complete holiday on account of 4th July, the Independence Day in the United States. And moving across the Atlantic from United States to UK, tomorrow, of course, we have the big general elections. So that's something we'll watch out for too.
Okay, Manglam, thanks a lot for all those cues that we need to track. For the time being, though, we'll wrap up on this edition